So in a business of high volume transactions, we have seen a lot of invoices that come in that don't possess the physical or the digital signature. What do you think? Does it really affect the eligibility of input tax credit? What kind of an audit should a compliance manager take in such a scenario?
I think you touched upon a very fundamental issue, Suresh. I think if I can, in terms of the number of audits or the number of kind of clients which we have handled, if I were to kind of branch out one such issue, I think this would be something in terms of input tax credit. This will be one which we always feel ki, with the number of invoices which are there, which are unsigned. I mean, is this something which is a risk or not a risk? So that issue certainly has been there. Maybe I'll kind of give a piece, but yes, just to kind of put it from a legal perspective, if we were to kind of say that every invoice needs to be kind of signed, then I'm sure half of the finance team will be running behind vendors asking for their autographs. Right. So we'll have to kind of look at law both from the intent perspective and from the objective perspective. Now, in terms of, let's say, let me first kind of cover the legality of it and then probably kind of come to the practical aspect of it. Now, in terms of legality, section 16(2), which basically kind of states that, yes, if I were to kind of take an input tax credit, I need to be in possession of a tax invoice. So that's the basic requirement. Now, if I were to kind of get into the rules, you have the rule 46, which basically kind of states that the invoice needs to kind of have specified contents, and one of those is something which is originally signed or digitally signed.
Right.
I'm not kind of considering the e-invoice, which is kind of enabled for specified kind of service providers. So wherever it is, if you read the rule with the section, it makes it clear that something which is originally signed or digitally signed is the only document on which you can kind of take credit.
Right.
So simpliciter, you need something which is originally signed, then it becomes valid. Otherwise, it is not as such. Now, if I were to kind of compare to the pre-GST regime, now we had, I think, Rule 9(2) of the SunVat credit rules, where certainly documentation was key as regards taking SunVat credit, but then there was an exception which said that if there were certain particulars which were not on the invoice, but still the goods were received or accounted for, is enough or sufficient for taking SunVat credit.
Right.
But unfortunately, in the GST law, we don't have something parallel to this. So therefore, then the confusion kind of comes in, is it a substantive non-compliance or is it a procedural non-compliance?
Right.
If I were to look at the pre-GST regime, certainly by virtue of the proviso, it clearly made it a procedural non-compliance. But because this is not something which is there in the GST law, we still have to kind of answer whether it is substantive or not a substantive compliance, maybe procedural. Now, the objective, now certainly from a government's perspective, if they have kind of said that a document needs to kind of be originally signed or digitally signed, it is more to kind of bring in authenticity.
Right.
If a document which is originally signed basically showcases that it is authentic, something which is not creates a doubt. Now, if we were to look at courts always look at a test which is substantive over procedural. Now, let's take an example how courts would evaluate whether this is a substantive non-compliance or procedural. A common example could be what? It could be, let's say, you have employees who give rent receipts for supporting their HRA claims. Sure. There could be three scenarios to it. One is that they have paid the rent and they have a proper receipt to it. Second is a case where they pay the rent, but they don't have a signed receipt. They just have an unsigned receipt. Third could be a case where they don't pay the rent, but then they have a document which is signed and said that as if they have kind of paid. Now, a substantive thing would be that payment, and procedural would be the receipt. So certainly, if I were to kind of look at in terms of this context from an invoice perspective, if a document which is unsigned, so long as it is corroborated, like say if it is a rental payment example, if I have an unsigned rent receipt, I could corroborate it with rental agreement. I could corroborate it with digital payment if that has happened. I could corroborate it with other things to kind of satisfy that from a sum and substance, a rent payment from this person to a specified, whoever is the landlord, has kind of happened. Likewise, from a GST input tax credit perspective also, it is important that yes, I have an invoice, but more importantly, in terms of substantive compliance, more important would be to see, have I received the goods? And in respect of those goods or services which I have received, I am making payment.
Right.
Now, that document, if it is unsigned, I believe is procedural non-compliance.
Then would you mean to say that appearance in TOBI would be the more substantive compliance?
Yeah, so therefore government has kind of built in certain checks and balances which strengthen these reportings. So if you were to see when GST kind of came in, the level of compliance as regards filing of returns was about 60 to 65%.
Right.
And with the kind of stress which kind of happened, where I have to kind of not only look at my compliance, but also look at my vendor's compliance, it has upped the compliance percentage from 60 to 65 to now 85 to 90. I think you take across any government or take across any kind of other statute, GST stands tallest as regards compliance is kind of concerned only because of the kind of stringent which they have kind of brought in. So certainly with that kind of, be it in terms of digital payments or be it in terms of this, I certainly see that while this is something which is, I mean, if you read the rule with the law, certainly having a originally signed invoice or a digitally signed invoice is a requirement. But if one were to kind of look at it from a substance over form, so long as I'm able to corroborate, wherever I have unsigned, so long as I'm able to corroborate with proper evidences which evidence the transaction, it should be still fine.
So in conclusion, you're trying to say that if we have received the goods or the services and we can evidence that, then obviously we are eligible for input tax credit.
Yeah, so receipt of goods, accounting of the transaction, payment of that are all the, those are the substantive, I would say, transactions or situations which evidence taking credit. A document evidencing them are procedural in nature.
Okay.
That way. So long as you have a document which is issued by the vendor, see normally what happens if you see the, any client for that matter, leave the e-invoice portion. So anything which is other than e-invoice, I am sure that half of them would be something which is an unsigned. So you'll have the regular practice of saying it's a computer generated invoice, does not require signature.
Yes.
You go to a restaurant or you go to a, let's say, kind of store. All of this basically you have a practice of an unsigned invoice, while wherever it is e-invoice or otherwise, while those are there, but wherever it is otherwise, certainly gets an e-invoice. So having an unsigned invoice from a internal control perspective is not suggested. Maybe from a process control, companies should look at having a threshold which says anything which in excess of a particular kind of amount, I shall insist for a proper signed invoice. So that's more from a control perspective. But from a legal perspective as regards a position, certainly just because I don't have a signed invoice, will that disentitle my credit? The answer is no. So let us not take the exception to the rule. Exception should remain exception. So the ordinary rule should be that I should insist for original signed invoice in all cases, but wherever it is not possible for practical reasons, then even an unsigned invoice should not take away the substantive right to claim ITC.